What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol FB for Meta platforms, or just better known as Facebook, of course. On the left-hand side, we have the daily time frame. On the right-hand side, the 30-minute intraday time frame. The first thing I want to point out here is the structure that printed on the daily bar. If I just expand this, make it a little bit easier on the eyes, there we go, that's looking much better. Notice that we have a green bullish candle. That's, of course, a hammer. Some people call it a pin bar. You can call it whatever you'd like, but nonetheless, the implications certainly are that the buyers stepped up off of the lows. What makes this setup even more attractive is the fact that this could potentially turn into, it's not a guarantee, but potentially turn into a double bottom. Now, of course, the neckline break is way up here around 235, but into tomorrow's session, if we take a look at the 30-minute time frame, notice that we have a smaller version of that exact pattern. There we go. There's your double bottom. There's the neckline, essentially where we've closed on today's session. So what this is going to do is set up a very easy trade for tomorrow. And by easy, I don't mean that this will be easy to pull off. I mean it will be easy to identify. Obviously, the market's going to do what it wants. The market always throws wrenches in our quote-unquote picture-perfect setups, but breaks of the neckline here should take us to this liquidity pocket in Facebook around 225 up to 226. There was an area in here where we had price acceptance before the selling really materialized, so I would expect to use that as a first target on a shorter time frame trade, like, something on the open, some sort of momentum style trade. That's the first target. From there, yes, it's the daily neckline for potentially the double bottom there, and there's another trigger, right? If you cross that, you're looking for the rotation to the bottom of the gap from the earnings conundrum around 248. So those are two bullish ways to look at Facebook. If you're more of a contrarian, you're looking to go short against this level. So any sort of failure, something that looks like this, we basically have a range, right? That would be a look above and fail. The target would be the low end of the range with a stop just over the highs. Okay, so that's one way to look at it from that more contrarian point of view. You would be aligned with the daily trend, so I guess I can't call you too much of a contrarian, but you are betting against this double bottom pattern and the potential for a double bottom on the daily as well. Do note that, but it wouldn't be unreasonable to think about, right? Here's another thing that could potentially support the bear case. If I take out our Fibonacci's from the high up here of this most recent leg lower, there we go, to the low, we're nowhere near recapturing the 38.2. So again, I would just sort of put this in the bear camp. This is technically nothing more than bear flag consolidation. So a number of ways to look at this. For me, I'm going with the short-term double bottom. If we take out the neckline, looking for longs into about 225. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.